if you were shorting the market, you did really well yesterday and probably the last few weeks, or not few weeks, but last week, assuming that you looked at these high momentum stocks, right? The biotechs, the Facebooks, the Twitters, the Yelps, right? I was even talking about the last week. I wish I had shorted more aggressively into yesterday. I mean, yeah, I was short some stocks, but I wish I short more of these stocks. I wish I kept my Facebook position, but I didn't. I actually went into one of these tech stocks on the long side, which I regret doing. But you make some money, you lose some money. Hopefully you make more than you lose. That's my strategy going forward. And so far it's working this year. But if you look at the Nasdaq, right, 2.6% down. And I wanted to look at the Forex market and try to figure out, hey, does that have anything to do with yesterday's move? Besides the fact that the market is maybe slowly but steadily starting to realize that some parts of the stock market are dramatically overvalued. Alright, look at this dollar yen chart, right, which I keep on talking about. It's the yen carry trade as long as the Japanese yen weakens in comparison to the dollar. But whenever you see the yen carry trade unwind, meaning that when this number goes lower, that means the Japanese currency appreciates and the yen carry trade unwinds. And if you see yesterday's move, could partly explain why you saw a huge move to the downside. You have like 103.91 to the upside, somewhere around there, when the jobs report came out, maybe. I don't remember what it was. Yeah, around there. And then all of a sudden, the market just threw up afterwards. And we saw the yen carry trade unwind, went to around like 103.28. So we saw this Japanese currency getting stronger against the US dollar, and where's the liquidity going to come from then? If the Fed is tapering and the Japanese currency is slowly but steadily starting to appreciate, then what will propel the market? I mean, sure, you could have earnings, but part of the reason, in my opinion, why the stock market went higher than where it should have been is because liquidity from the Fed, now they're cutting back a little bit, the Japanese yen carry trade, but now we're slowly but steadily starting to see it unwind. And here's the deal with Japan, though. I'm going to show you some charts and try to put everything together or connect the dots. And I'm just looking at this dollar yen chart from the 90s, right? And I wanted to look at something interesting. So why am I showing this from the 90s? Well, first of all, in the late 90s, like 97-ish, the Japanese decided to institute a sales tax. And some of you may say, okay, what does that have to do with right now? Well, the Japanese are instituting a sales tax once again. And temporary, I'm talking about maybe the next few months, if you look at what happened in April of 97, right, you saw the dollar yen at 126, but then all of a sudden it went to 114. And if you look at it, that's a huge move, right, appreciation-wise, in a relatively short term. I mean, some people might say, hey, whenever you see the yen carry trade unwinding, that's normal. Okay, whatever. But regardless, that is a huge move. So if you look at in the 90s, you see the yen at 126 going to 114. What does that mean now if the Japanese are instituting a sales tax? Let's look at some of the charts that I've created. This is another chart that I created in relation to the S&P, and let's look at the dollar yen. Alright, and right now I'm looking at this yen versus the S&P for quite some time, since 2000-ish. And as you can see here, there are at times where you could see that the chart is correlated with the dollar yen, and sometimes it's not. But from like 2011-ish, especially if you look at end of 2012, right, you could see that for the most part, whenever the Japanese yen is appreciating, right, not appreciating, depreciating, going down in value, the S&P has gone up. I mean, this chart is as of, I don't know, October of 2013. But for the most part, they do go hand in hand up until recently, right? So let's just assume that you have a sales tax. We do have a sales tax in Japan, or there is a sales tax in Japan. That being said, if you have a sales tax, what does that mean? Because of the Laffer curve, the more you tax, the less that you actually get. So the market, how are they going to react? In my opinion, the market's going to say, you know what? The yen may appreciate, meaning that the dollar yen will go this way. And what would that mean for the stock market initially? Could that mean that the market goes further down from where it is right now? We shall see. Because what I found interesting yesterday was that the dollar yen, it got whacked, right? Meaning that it went down, or the Japanese yen appreciated. And then the Nasdaq, that got busted. I mean, if you remember last year, the moves were significant in some of these high flyer stocks, the momentum stocks, the biotechs, right? So I'm just wondering, or what's going on in my head is that, hey, if this sales tax goes through and we see similar effects in the 1990s, then temporary, the market has much further to fall, especially for these momentum stocks. But you have to realize that some of these momentum stocks have been hammered. Like Yelp is down 35% within a few weeks. That's insane. It was $100 just 3-4 weeks ago, and I was even talking about that. I should have shorted it. I only shorted Facebook when it was like 71, and I got out like around 67. I wish I kept that, but I shorted other things, so I guess it made up for that. But anyways, this is something that I'm going to be watching, the dollar yen. I know most people are not going to talk about it, maybe except the YouTube channel In the Money Stocks. I have to get that guy on, but he's the only one that I see from a consistent basis talking about the yen carry trade and how it's correlated to the market since like early 2013. But anyways, guys, I'm going to talk to you later. Leave your thoughts below. See ya. Bye.